The state of the US economy here in early 2026 is defined less by strength than by contradiction. Official headlines proclaim job growth, falling unemployment, and record-breaking stock markets. Donald Trump and his allies amplify these signals, insisting that America is richer than ever before, sharing identical but false talking points amongst allies.
President Trump is the quintessential optimist, which is the mark of a great leader. When I asked him in our White House interview if he could beat history in the midterm elections and keep the House and Senate in Republican hands, he said yes. In fact, he said he was going to change history by winning the midterms. And he reiterated that we have the hottest country anywhere in the world, and he would do his best to get the word out on what he called the greatest economy in history.
But beneath the surface of those claims lies a far more uneven reality. Wealth is soaring at the very top, particularly among billionaires and technology investors, while working people face stagnant wages, rising living costs, and an increasingly fragile labor market. Today's jobs report only sharpens the sense that the public story and the lived experience of millions of Americans are drifting further apart. The Bureau of Labor Statistics reported that employers added 130,000 jobs in January, bringing the unemployment rate down to 4.3%. On paper, that sounds solid, but the same report included sweeping revisions to prior data that dramatically changed the picture. Last year's total job gains were slashed by more than 400,000 positions, leaving just 181,000 jobs added for the entire year. 69% fewer than initially estimated. In total, the economy now has more than 1 million fewer jobs than previously reported over the past 2 years. Trump is purposely fudging the numbers, and patriotic Americans are quietly living off their credit cards. Such revisions are part of a long-standing annual reconciliation process as survey-based estimates are adjusted to reflect more complete state-level data. Still, the scale of the corrections is striking. A labor market once described as resilient and robust now appears far weaker. Federal Reserve Chair Jerome Powell previously acknowledged that labor data had been distorted, at one point suggesting that job creation may have been overstated by tens of thousands each month. Government shutdowns and delayed reporting have further clouded the picture. When a regime tightly controls the release and framing of economic statistics, skepticism about the headline numbers is inevitable, even when the statistical agencies themselves operate with established procedures. More troubling than the revisions are the structural signals embedded in the data. January's gains were heavily concentrated in healthcare and social assistance, which together accounted for the majority of new jobs. Construction and professional services also saw increases, but retail, trade, and leisure and hospitality, sectors that employ millions of lower and middle-income workers, barely budged. Federal government and financial sector employment declined. This is not broad-based prosperity. It is narrow growth in essential or specialized areas. Meanwhile, layoffs surged. Consulting firm challenger Gray & Christmas reported more than 108,000 job cuts in January, the highest January total since the depths of the Great Recession in 2009. That figure represents a 118% increase from a year earlier. Contract losses, market conditions, and restructuring drove much of the bloodletting. Major corporations led the way. UPS announced plans to cut 30,000 jobs this year after eliminating tens of thousands previously, while Amazon revealed another round of corporate layoffs as it reshapes its business model. Even more telling is the collapse in hiring plans. Employers announced intentions to fill just over 5,000 jobs in January, the fewest for any month since tracking began in 2009. Economists describe the current environment as low hire, low fire. Workers who have jobs are clinging to them, hesitant to switch employers amid uncertainty. Those who are laid off face a shrinking pool of opportunities. The unemployment rate may remain relatively low for now, but the churn that typically allows workers to advance into better-paying roles has slowed dramatically. Against this backdrop, Trump's insistence that America is richer than ever rings hollow for most households. It is true that aggregate wealth has climbed, stock markets are hitting all-time highs, corporate profits remain strong. Billionaires, particularly those tied to technology and finance, have seen their net worth swell. But aggregate wealth is not the same as broadly shared prosperity. For working Americans, wages have struggled to keep pace with the cost of living. Inflation has cooled from its peak, but remains above the Federal Reserve's 2% target. Housing costs remain elevated, groceries are more expensive than they were 2 years ago, and interest rates kept high to tame inflation have made mortgages, credit cards, and car loans more burdensome. Even modest price increases compound over time, squeezing households whose paychecks have barely moved. The gap between financial markets and Main Street reflects where investment is flowing. The dominant story of the past year has not been a renaissance of manufacturing employment or a boom in small business hiring. Instead, capital has poured into artificial intelligence, automation, and data centers. AI alone was cited as the reason for thousands of job cuts in January. Companies increasingly advertise AI tools as replacements for human labor in customer service, coding, marketing, and logistics. Data centers, massive energy-hungry facilities that power AI models and cloud computing, have become the infrastructure backbone of this investment wave. They require substantial capital expenditure and create some construction and engineering jobs in the short term, but once built, they employ relatively few workers compared to traditional industries. The returns accrue largely to shareholders and technology executives, not to a broad workforce. This shift compounds inequality in two ways. First, it directs investment towards capital-intensive sectors that generate high profits with minimal labor input. Second, it accelerates automation in white-collar and service roles, once thought insulated from technological displacement. When companies can cut thousands of jobs and cite AI as justification, the bargaining power of workers weakens. Fear of replacement discourages wage demands and job mobility. The result is an economy that appears strong in aggregate indicators, but brittle underneath. Unemployment remains low by historical standards, yet hiring has nearly stalled. Wealth is at record highs, yet it is concentrated among those who own appreciating assets, stocks, tech firms, real estate, not among wage earners. Official data shows job growth, yet revisions reveal that previous optimism was overstated. None of this means the United States is in a recession. Consumer spending continues, and certain sectors, especially healthcare, are expanding. Huge profits for industries that shouldn't be profitable at all. But the narrative of paralleled prosperity obscures a more nuanced truth. The country may be richer on paper, but that richness is unevenly distributed and increasingly tied to capital rather than labor. If policymakers and political leaders continue to celebrate stock indices while ignoring wage stagnation and labor market fragility, they risk deepening public disillusionment. Economic health cannot be measured solely by the net worth of billionaires or the market capitalization of AI firms. It must also be judged on whether ordinary workers can find stable jobs, switch employers for better pay, and afford the essentials of daily life without accumulating debt. Today's jobs report, with its headline gains and sobering revisions, captures the paradox. For millions of working people confronting stagnant wages and rising costs, the promise of that wealth remains out of reach. Trump and his friends are undoubtedly richer than ever. But for everyone else, not least those hiding from ICE abductions, making a living is tougher than ever. In some cases, people are cold and hungry, and increasingly desperate, and unseen by the Trump regime. I'm Anthony Davis. You can find me on the 5 Minute News YouTube channel and podcast, on Wednesdays co-hosting Uncovered, and on Sunday on The Weekend Show with MeidasTouch.
Love this video? Support independent media and unlock exclusive content, ad-free videos, and custom emojis by becoming a paid member of our YouTube channel today. You can also gift memberships to others. Let's keep growing together.